the most common mistakes that couples make when they are thinking about their finances, thinking about long-term planning?
A lot of people may not be optimizing finances because they're not talking about it, because they're not managing it together. Men don't like to share and women don't like to ask. It's very important to have the money date, this one day where you're going to talk for maybe a couple of hours about your finance.
What if my 35-year-old wife decides to take a career?
Even now, people who are retiring don't talk about what both the partners want. Before actually even thinking about goals, it is very important to do two things. One is to create a very good foundation, and very importantly, you need to be prepared for uncertainties of life. So, for all of this, you need to have your emergency fund, you need to have your life insurance and health insurance in place.
The economic value of the work that's coming in from women is of course understated. On top of it, if the women's income, as you rightly mentioned, is going all into expenses and not actually being used for investing.
The person for whom the income is going to expenses has nothing left to show for themselves after 10 years.
That's right.
So I think there should always be a good
Balance. Indians tend to overlook the role of insurance in financial planning.
Of course, in India, it's a very underinsured country. Even at an individual level, the amount of insurance that people have is really low, right?
Welcome to another episode of Depend on Insurance, Depend on Us. I am Rishi Mathur, the Chief Marketing Officer and CDO for alternate channels at Canara HSBC Life Insurance. In this series, we'll be exploring real-life financial challenges and providing expert advice on how to make smarter decisions that secure your family's future. Our goal is to equip you with the tools you need to plan, protect, and prosper in your financial journey. Today, we are kicking off a crucial topic, the foundation of financial security. And joining me to dive into this is a true expert in the field of personal finance, Mrin Agarwal, the founder of FinSafe and Vumantra. Welcome, Mrin. Mrin, you had a successful career in corporate finance. So what made you transition to the field of, financial education and, telling people about how important finances are especially for women? So what made you do that transition?
So actually, Rishi, for the first 20 years of my working life, I basically used to manage very high net worth wealth, and all my clients were only men. And I always saw that the women were not really involved, or they were actually a little scared also at times to even meet me, honestly. And I just said that if I really want to make a difference, so there comes a point in your life where you feel that you want to make a difference. And I felt if I want to make a difference, and this is the way for me to do it, right? So 20 years I managed the wealth of billionaires, and I said, okay, now it's time for me to do something, which is probably going to help the wider society. And why not take up financial education, because that's using my own expertise also.
So I think we are going to today talk a lot about couples and how people think about wealth and how they think about their finances. So what are the most common mistakes that couples make when they are thinking about their finances, thinking about long-term planning? What happens? I'm sure you have that experience which we are really looking forward to hear about.
I think first and foremost is this big question of whether we should handle it together or should we keep it separate. And I think, if you even go 10, 15 years back, that was not a question in people's mind. But a lot has changed in the social structure of our society. And, so this is point number one, that a lot of people may not be optimizing finances because they're not talking about it, because they're not managing it together, and they're not really working towards long-term wealth. So, today we are seeing everything is about consumerism, instant gratification. And somewhere I feel that, the longer-term needs and goals, like, for example, saving for retirement or just wealth building in the long term, is actually getting missed out.
No, I think that's very true. I think we always talk about the fact that it's required to kind of think about the long term. And I think what better to kind of get talking about than the long term goals that both couples share. So that's, I think, a very valid goal to talk about. Let's talk about couples and money. Managing finances in a relationship can be tricky. So uh, when should couples start this money conversation that talk about money? And what suppose you have a newlywed couple, then what kind of money topics should they be talking about? What kind of topics should they cover when they're talking about finances?
So I think it's very important to have the money date, this one day where you're going to talk for maybe a couple of hours about your finances. I think
That
it's
word money date, right?
yes, I think it's very, very important. And honestly, I think even for couples who are getting married, I think they need to have the money talk. It's a very taboo subject in India, and especially women talk about it. It's always thought of as being money minded. If a woman were to start talking about money and say that, hey, how are we going to manage the family finances, right? How would most people think about it? But I think it's very important. Number one, when you're in a relationship, to first of all be very honest about everything that you're doing. So we have seen this very often where people tend to hide their loans, right? And I think it's very important to first of all be open and clear. Of course, you need to manage it together. You need to figure out who's going to do what. And, irrespective of who's doing what. So, like, one person might be looking after the investing, for example, but that doesn't mean that the other partner is not aware, right? So, awareness of what is happening with the family finances is equally important. So, I would say that talk about what are your joint goals, what are your individual goals, because hey, we all have our individual aspirations that we want to fulfill as well, right? And I think it's very important to think about it in a very non-judgmental way. So Rishi, many times it happens ki one of the partners might look down and say, oh, why do you need money for this, or something like that. So I think it's important to be open and non-judgmental, talk about common goals, talk about the individual goals, and how do you really intend to do it, and talk about the division of labor, like who's going to do what and how are they going to keep the other person informed about it.
Wow, that's a lot of learning in a few sentences, when really talk about everything, inform each other. Individual goals are equally important as joint goals, and obviously give accountability for who's doing what, but keep everybody each other informed, right? Wow, that's I think the real mantra of how to kind of make it work. Yeah, lovely. That's exciting. So when you kind of set a joint goal or set a budget together, how much financial information do couples actually share? I think you just mentioned about it, that a lot of people don't mention about the loans that they have, right? And so income is also sometimes taboo. Income, debts, credit cards, insurance policies, many of these things are not talked about, or they are not shared very openly, right? So should couples be sharing all of this information with each other? Should they actually share the passwords to their kind of common accounts and all that? What are your thoughts about this? What's the practical experience around this?
The practical experience is, and if I may say so, that men don't like to share and women don't like to ask, right? Because they have this inherited bias that someone's taking care of it. The man of the family is taking care of it, so it's fine. We don't need to know about it. I think for both people's financial well-being, it's very important to be aware of each other's finances and, of course, what's happening together with the family finances. I have seen so many cases of working women who, just at the end of the month, just tell their spouse to take care of the money and say, just give us money to spend and baki ka aap dekh lo. And I think that's a very wrong attitude to have, because, you are, I would say in some way, you are endangering your own well-being without being aware of your financial matters, right? Now, in cases where one of the partners is not willing to share information, I think it's important to make the other partner understand that you need to know the information for your own financial well-being. And also, I would specifically say this, that for the partner who's not interested in getting into it, I think managing your money is as important as your physical and your mental well-being.
Right, right. No, I think that's a very important point that being involved in managing the money is extremely important. So yeah, so I think in fact that's where we kind of also get into some of the specifics, like for example talking about the insurance policies that you have, because eventually that is where you need to be knowing about it when an emergency strikes. So that's also a fairly critical activity, and when today everything is digital, so I think that's also something. So do couples actually share their passwords to the common accounts and all of that? It doesn't happen, right? But it should.
The most common thing that I hear from women in my own circles is always stories of other women whose spouse might have had a medical emergency and they didn't even know who do I contact to find
Okay.
out about the medical insurance.
Right.
So that is the level of lack of awareness that exists today, where people are not even aware of these very, very important aspects, right? Ki tomorrow, if somebody is having a medical emergency, how do I get hold of the medical insurance, right? And who do I contact for it? Like they won't even know ki policy kahan rakhi hai. Right? Okay, forget even if you don't have the paper, but how do I even access it online?
Right.
So to answer your question, on do people actually share documents and everything, the answer is no. And I think there is a solution for it now because everything can be stored in DigiLocker, right? Life as well as health insurance, which are so important documents, can be stored in DigiLocker. So now you don't need to share 10 different passwords. You can share one DigiLocker ka access, and that itself can help you access those documents at the time of need.
Yeah, no, I think that's very important, because that's when the promise that has been made actually comes to fruition. So I think that's a very important point, at least to start. And I think it all starts with sharing. So when you're talking openly about money, my guess, then you will find the importance of all of this that's going on. So yeah, that's really important to start with. How does this planning change when when couples have kids? I remember one of my friends once told me that that was before I was married, that when you'll get married, it'll be kind of like more of the same, but when you have kids, then your life changes completely, and that's very true. I've seen that. So when couples have kids, then how does this whole work, thinking about finances, thinking about money, how does that part change?
I think they become more serious about it. So all this while it's like, okay, having fun and maybe seeing the world and having all the experiences. But once you have a child, and of course you have a responsibility, and hence you become more serious and start thinking about, saving for the child's future as well. So to that extent, yes, but also it brings with it higher expenses, right? And there's no end to expenses these days, right? So I think I think they're both sides of the coin. One, you become a little bit more serious, but at the same time, today the other thing that I'm seeing is that with people having children later on and having single child, right, the tendency to also overspend is a lot.
Yes, yes. No, that's right. And I think that brings us to the point that uh, a lot of people, then think about that, should they be planning for their kids and their education, and should that come first before even thinking anything about retirement? And particularly if you have two children or maybe more, then what to plan first versus what to do for retirement is an issue. Does that come up, or how does that?
It comes up a lot, and my advice always is you need to be very selfish about your retirement, because there is no loan and you're going to have to look out for yourself.
Right,
I'm
right.
sure that in today's world, I don't think that any of us are really wanting to depend upon our children at retirement.
Right.
So I would say that you have to be really selfish about retirement, and I think it's one of those goals that no one should compromise on, and you should be saving for it irrespective of what are the other responsibilities that you have. Right? So and I think Rishi, like all of us have grown up in times where there were not that many resources,
Right,
but
right.
still things worked out.
Yeah,
So
yeah.
I truly believe that everybody doesn't need a high cost education and for things to really work out for them.
Right, right. No, I think that's very valuable advice, because I think the more conventional situation is always that you would prioritize the kids thing, and then, as you're rightly pointing out, sometimes that selflessness may not be the best option. You have to plan for retirement, you have to plan for the longer term, and particularly with the kind of lifespans increasing, medical advances, this is becoming a very important part of long term planning and wealth creation. Yeah. So, how do couples plan for retirement if their incomes are very different, their ages are very different, So they may be having slightly different, priorities as well. So, any cues you've kind of figured about how to look at such situations? Because I'm sure you would be meeting couples where the income disparity is significant, or in some cases even ages are very different. Yeah.
Actually, the first thing is to talk about the goal.
Okay.
You know, this is like one of the things that I see is that everybody has a retirement goal, but are they talking about the goal? Because you see, one of the partners might want to live in a city, one of the partners might say, I want to go back to the hometown.
Right.
One of the partners might have plans during retirement. It could be travel, it could be maybe, starting a business or supporting a charity or whatever, doing some of whatever they wanted to do in their life. So like, for example, I know of this person who took early retirement and is now pursuing a professional course. Right, at the same time the person is learning tabla and doing some 10 other activities. He's very artistically endowed, right? So you need money for all of these things, right? Whereas when you look at the spouse, the spouse is like, I'm okay to move to the hometown and lead a chill life, right? So I think it's very important that first of all, you need to talk about what does retirement really mean to you in terms of where you're going to live and what is it that you're going to spend on, right? And then once you and come to a joint understanding, because I feel that even now people who are retiring don't talk about what both the partners want, right? Now, once you've come to the joint understanding, you'll have a fair idea of the money that you need. And of course, there are many retirement calculators that are available online through which you can then work out what sort of a corpus you need to build, right? And then take things forward in terms of where to invest. But I think the starting point is to really understand where are you going to stay, what are you going to spend on, and are you going to be generating any income? I think, both the spouses need to talk about this.
Yeah, no, I think that's very important. I think a lot of time couples talk about what they'll do with their time, right? I mean, people have that, they go ahead and talk about what they'll be doing with their time and all of that, and perhaps then they do think about where they will be. But you're right, often the conversation doesn't proceed to what will be their expenses. Can they really predict that? Will we be generating income? Will one of the couple actually generate income? So very relevant points actually that that also need to come into the conversation, which is important. Yeah. Then what are the top 5 not to ignore things when couples are planning for the financial future? So I think if you were to kind of just summarize, what are those top 5 things that you feel that is very important?
So I think quantification of your goals is extremely important. Like we might say child's education is something that we are saving for. Now, child's education where? Because if let's say you want to educate, do an undergraduation in India, let's say it's going to cost you anywhere between 5 and 25 lakhs. If you decide to do this undergraduation in, for example, Europe, maybe it'll cost you 65, 70 lakhs. If you're going to do this in the US, it's going to cost you about 3.5 crores, right? So I think, quantification of the goals, right? And having a financial plan. Rishi, most people do not have a financial plan in place.
Right.
Most people do not, don't even know where to find a financial planner. So it's very difficult for them to actually have a structure around their goals, because and unless you really have a structured plan around the goal, it's very difficult to achieve it, right? Second thing is, what typically happens is that people invest in a very, very ad hoc way. So for example, when gold was doing well, then everybody was going and investing in gold. When small cap was doing well, everybody is doing small cap. that's not the way to invest. When the markets are down, then people are asking, should we actually redeem our equity investments? Now, that's not the way to look at investing, right? So you need to have a very, very structured plan around your financial goals. That's
Right.
point number one. Secondly, before actually even thinking about goals, it is very important to do two things. One is to create a very good foundation, and the
Right.
only way you can build a good foundation is good savings,
Right.
for which, whether you like it or not, you need to budget.
Right.
Okay. And very importantly, you need to be prepared for uncertainties of life.
Right.
Right? It could be today a medical uncertainty, it could be a job loss, it could be a large expense, it could be so many things that can happen in terms of uncertainties, and of course, death. Right? So, for all of this, you need to have your emergency fund, you need to have your life insurance and health insurance in place.
Right.
Right?
Right.
And again, when you look at life and health insurance, you need to have the right amount. Right? As I'm sure you know,
Yeah.
we
know
have India is one of the most underinsured countries in the world, right? Even at an individual level.
Correct.
So this is what I would say, that overall you need to have a plan for your finances, but before you can think about goals, think about protecting yourselves against uncertainties,
Right.
and of course building savings, which is very important to build a good foundation.
Yeah, that's very well said. Actually, we also reiterate that point that, सबसे पहले life insurance, and obviously we need to first protect what we value and then build what we kind of
Yes.
build value around that. So that I think is very important, and I think for all couples that's really the key. So Brin, that's really like something which is very close to our heart, and we talk about it as well. Now coming to something which I'm guessing people don't want to talk that much about, but the reality is that there are often money disputes between couples, right? So, what are the common money disputes that you have seen when you talk to couples about, and what are how do they get kind of resolved? What is the advice that you give as the expert on how to solve these disputes?
I think a lot of money disputes are around expenses.
Okay.
And I would say about third parties influencing financial decisions. So,
Wow.
see, in all households, you'll have some maybe parent-in-law, or
Right,
some other
right.
family member who might be influencing.
Correct.
And this is something that we don't talk about much, right? But I think always, like, if you see in households, there'll be somebody saying, no, you should do this as an investment.
Right.
Or there'll be somebody who's done investing and has had some success, and then that person is being followed. Now that actually, between couples, if you ask me, can be a big source of
Yes.
disconnect.
Right.
And cause conflict, right? Because one partner is not going to like that you're just always listening to someone else and basing your financial decisions on that.
Right,
And this
right.
still happens a lot in Indian house. So, so this is point number one. I think point number two is on expenses,
Right.
right? So again, berating one of the partners for doing certain expenses,
Right.
right? And in the couple, you'll always find one will be spending more and one will be like, okay, reasonable on spending. So I think expenses cause a lot of heartburn. I would say also nowadays we see this, that taking too many loans,
Oh.
right? Taking too many loans for everything. I mean, at the end of the day, having too many loans is just really bad for mental health as well. So
Right.
that also causes a lot of heartburn. And I think the way to go about this is, again, coming back to the whole budgeting aspect, where I typically recommend a 30-30-40, which is 30% of your take home goes towards expenses, 30% goes towards EMIs, and 40% goes towards savings. Now, within the expenses, there should be some amount which is going towards discretionary expenses, which is your fun expenses, right? And each individual has their own way of spending that fun
Right,
expense,
right.
right? It could be shopping, it could be going to the salon, it could be, going for a short trip or whatever it is. But I think you need to have some amount kept aside for fun expenses, which is no questions asked and nobody's going to judge you or say anything about it,
Yeah,
right?
yeah.
So I think if we can follow these couple of small things, and the other thing that I would also say is that whatever money decisions you're taking at the end of the day, you're responsible for it. So I
Right.
think you should think about it carefully before you take that decision.
No, I think that's really valuable points. I think this whole point that I didn't kind of figure was about the other, influences that come in, and you're right that that can cause a lot of conflict and disputes. But I think there is always a solution for everything, and I think you've kind of hinted towards that. That I think it's finally all about discussion and having a very open and transparent approach. If you're keeping your discretionary expenses as a separate block or a bucket, right? And then if you have defined it, then you know that that's where all of it has to kind of come from. And if you've defined those buckets correctly, as you rightly mentioned, like, could be 5 to 10%, then you know that you have kept adequate money in your other blocks. So that should actually resolve some of the disputes that otherwise, kind of come when you're going anywhere else.
And to add to that, I would say the same thing about loans, because these days
Right.
there's a very high propensity to take loans given the easy availability of credit. So for example, you go to buy a TV and you plan to buy a 65-inch TV, and then you see this buy now pay later scheme, and then you end up buying a 75-inch TV, right?
Right.
Or nowadays you have salary advances, which honestly are very detrimental to a person's credit health, honestly.
Right,
I mean, to
right.
their financial health and for their credit profile as well. I would just say that, again, if you're dealing with a partner who's taking a lot of loans, I think you need to talk about it, figure out why is the partner taking so many loans,
Right.
and, draw a roadmap to actually repaying those particular loans, because this is another very big issue today.
Yeah, no, I think that's very important, because I think people, and this is a insidious. It kind of keeps creeping up, and then you kind of realize that couples realize that they've kind of got into what we conventionally call a debt trap, right? That's what you are referring to. You're right, and I think you rightly put it that just to summarize, that need to talk about it, need to understand what's the total amount of loan that is there. So any idea about what is there a rough cap that you think couples should have, saying that loans no more than X percentage of income? What's that?
30% of take home income going towards EMIs. That should be
Okay.
your limit.
Okay, and that's like the maximum. You could ideally be a
Yes.
little lesser. Yeah.
It could be lesser, but the problem when it's more than that is that the interest that you're paying is compounding at a much faster rate than the interest that you're earning on any investment.
Right.
So, yeah.
Yeah. So that could be the debt trap.
Yeah.
No, that's great. Now we'll shift gears a little bit and maybe move towards, talking about one of the most important aspects, which is related to insurance. So, in your experience, do Indians tend to overlook, the role of insurance in financial planning, or it's like kind of relegated to some complete, small area of thought process? What's your experience around that?
I think traditionally it's been used as a tax planning tool.
Right.
But what I believe that, again, with the way things have changed in terms of our lifestyle, our expenses, the value of our goals being so big,
Right.
I think it's very important to recalibrate and to figure out how much of insurance cover that you need to have.
Right.
And you need to think of it beyond a tax saving tool or giving a return on investment to something that's going to be there for you, or something that's going to be there for your family in case of a contingency.
So yeah, so I think that's very important, because I think a lot of people, what I hear is that it's more default, and that's what people are doing. So that's a great insight that you've shared with us, that it's important to link it to your goals. It's important to protect what especially when you have big goals, you do need bigger level of protection as well, and that's the takeaway that I think all our listeners should keep in mind.
Yeah, and of course, work on the HLV calculator.
Right,
They're
right,
available so easily online.
Yeah.
But that's going to tell you the right amount of insurance to have. So I think that's
Right.
very important as well.
Right. Okay, let's get into some more practical tips for all of the couples that we are talking to, and so maybe let's look at a few what if scenarios, right? And I'm sure that you have faced so many of these what if scenarios in the sessions that you conduct.
Yeah.
So I just put a few of them down. So okay, what if we are in our 40s with kids nearing college age, which is very much situation for a lot of couples right now, and haven't planned much for the future. So in that situation, what's the what if? How do you take care of that situation?
So one, of course, you need to go on a spending detox, because
Okay.
unfortunately what also happens is that the expenses are very high at this point in time with
Hmm.
teenage kids,
Hmm.
right? They want to spend on, they want everything branded these days, and
Yes.
not
Yes.
not regular branded, high branded,
Right.
right? So I think one, you need to have, you need to have a spending detox and certainly try to follow the budgeting rule.
Right.
Second, of course, is to be prepared for any uncertainty. Rishi,
Hmm.
today we are seeing the job insecurity at that age is so
Right.
high.
Right.
So certainly you need to figure out a plan B,
Hmm.
and you need to
Hmm.
be prepared that in case if something happens, then you can manage. Thirdly, I would say, of course, you need to be investing very aggressively into equities,
Right.
right? Because if you haven't done any planning till now, and you need to do something, and then you need to be very aggressive with your investments. The fourth thing, which is an unpopular opinion, I know, is that both the partners need to be working. Both the
Yes.
partners need to be generating income
Income.
and need to be contributing to the family income. I think that is very, very important. I think today on one partner generating income is not going to be, it's going to be very difficult, honestly, with again the size of the goals that we have.
Right, right. No, really valuable advice, and I think it is a bit unconventional, but I think what you're saying is very true. Obviously, first point is obviously start to fill the kitty faster. So, just to summarize, take a detox on your spending. Make sure that you have the right kind of investing being done. Invest aggressively into equities if you haven't planned so far. And finally, obviously getting double income is very important to make sure that you are well planned for your big goals. I think really relevant points. Okay, let's take another scenario. What if we want to buy a home and start saving for retirement, but then there are actually two or three goals coming up which are big, right? And you feel a little overwhelmed with multiple goals coming up, and I'm sure couples will have that situation. So how do you handle that scenario?
So I would say that you have to prioritize some of the goals.
Hmm. Hmm.
And so, see, the money that you have to invest is always going to be limited,
Right.
right?
Right.
So, this is where you have to prioritize some of the goals and see if some of the goals can be moved out. So, let's take an
Hmm.
example.
Okay.
Let's say you're saving for retirement.
Hmm.
Let's say you think of buying a house,
Hmm. Hmm.
and let's say you're saving for a child's education,
Right.
right? Now, if you have limited funds to invest, then you might want to look at pushing out the house goal by a
Right.
couple of years,
Right.
right? And say that I will not compromise on retirement and child's education,
Hmm.
right?
Hmm.
At the same time, one of the other decisions that you need to take is, should I increase the amount for child's education
Hmm.
and maybe reduce the amount for retirement? But since my retirement is further away, take a more aggressive investment.
Right.
So there are different strategies that you can adopt. One is to push out the goal. The second is that if you have time on your side, then you could look at having a more aggressive investment, right? To say that maybe I'll invest in small cap,
Right.
right? Because if my retirement is 20 years away, I have 20 years period. So, okay, let me do small cap,
Yes.
right?
You can take more risk.
You can
Yeah.
take more risk,
Right.
right? And the third thing, of course, could be, prioritize the goal to see, what is really important for me right now. But very importantly, you need to have a good balance,
Right.
right?
Right.
One cannot be at the cost of the other.
That's right. Yeah. So I think just that's important. Prioritize is like really critical. Prioritize and balance. And obviously, longer term goals, you can actually afford to take a little more risk. And you can also afford to be a little more flexible in terms of maybe a little less right now, but a little more later, right? Valuable advice there. What if my 35-year-old wife decides to take a career break? Yes, that is very common. And how would better financial planning help in that scenario?
So I think even if you're thinking of taking a career break, number one, you need to plan for it for 5-6 years to ensure that you have enough amount.
Right.
Number two, I would still say that you have to find a way to generate some income. Maybe you're not working in a job,
Right.
but maybe you're doing something else that's helping you generate income and also keeping you mentally engaged, which honestly is equally important today. Right? And you need to really think about this decision very carefully, because it's putting a lot of financial and mental pressure on the other partner.
Yeah. Thanks, Min. That is really important, because you're right that the career break decision itself is a very critical decision. So yeah, ideally, if you can avoid it, it's great. But if you don't want to avoid it and you want to take it, then you have to plan for it very well, right? I think that's a great advice. Final one. Can you share a real life story of a couple who actually turned their finances around and were in a little bit of a difficult situation and actually turned it around and made a success story of it? I'm sure that will be very inspiring.
Yeah, so there was this person whom we came across in our line of work, and then she reached out to us separately and said that my finances are in a completely bad state. I have no idea where my husband's invested, and I'm earning this income, but I don't know where it's going.
Okay.
Right? So while we put her on to a financial planner, just stayed connected to see what's going on as well, right? So what it turned out was that like the money, her salary was actually being used to pay off EMIs. Okay. And of course expenses, and this is very typical again, that man's salary is saved and woman's salary is used to pay expenses and EMIs. Okay. And the husband was investing in all sorts of stocks and everything, and it was just all over the place, honestly.
Right.
Okay. The net was that they did not have much savings. Okay. So then this planner actually worked with them, and I remember this was 5 years back, because it was at the start of COVID when this happened. And I recently met her because it's one of the clients that we work with, corporate clients that we work with. I met her over there, and she came and she said ki, thanks to you all, I have actually built my investments so well that I know that I can now afford an education for my child that I could not think about earlier.
Wow.
Right? And she's also repaid off her loan.
Great.
So she also prepaid her loan, and she saved enough. I mean, as a family, what it actually entailed, it took a lot of convincing for her to actually tell the husband to clean out that portfolio of whatever he had and then start afresh with the planner. Right? So they also got lucky, I would say, with some of their investments. But yes, it's a very, very nice story. And, we do have people telling us this all the time.
Wow, that's really inspiring, because I think it's a tough act, but I think if you can turn around from a mess to kind of being very, very well planned, that's excellent. Yeah.
So Rishi, actually, we see this a lot, that for all the people that we're talking about who are not doing things, there are a lot of people who have the intent to do things.
Correct.
Right?
Correct.
And two stories that really stand out to me, which I remember over the years. One was of this lady whom I met, who had worked for 20 years and then had a divorce after 20 years. And, so she came up to me and she said that after 20 years of working, I have nothing left, because she said, I was literally running the household and paying all the loans and everything. And, now I don't have the house also, because I think you need an NOC from the husband in order to close the loan, which he is not giving. So she has no house. And she said, it's literally like 20 years of my savings has gone. So what do I do? Right. So, we again, of course, put her on to a planner who kind of advised her on what to do. And she's slowly rebuilding her life. It's like really tough for her, because she's still taking care of all the expenses for her children and everything. The other instance that I have is of this lady who said that my family is not allowing me to invest into certain instruments.
Okay.
And I want to do it. Right. So how do I do it? Right? And she actually went ahead, and then we just told her how to do it online, and she just went ahead and she started doing those investments. So she had written into us saying that thanks a lot. And now I have actually gone back to the family and told them that I have done this. Thankfully, the investments have also done well. Right. So she could actually go back and say, hey, I did a good thing.
Well, I think that's going to happen a lot more, because I think women's intuition about some of these things is better. And I think it's a little unfair. I personally strongly believe in this point as well, that the economic value of the work that's coming in from women is of course understated. On top of it, if the women's income, as you rightly mentioned, is going all into expenses and not actually being used for investing, then in effect there could be a risk
Imbalance.
situation
Yeah.
going later, which you mentioned in that situation.
And even
Yeah.
otherwise also,
Right.
right? It's a very bad way to plan things if one person's income is going for expenses and
Yeah.
one person's income is getting saved, because the person for whom the income is going to expenses has nothing left to show for
Right,
themselves after
right.
10 years.
That's right.
So I think there should always be a good balance.
Yeah,
Yeah.
yeah. I think the key to that is all balance, right? Yeah. When we talked about financial protection and the importance of keeping your family protected. Any ideas or any thoughts you have about using, for example, the power of MWPA in insurance and how it's really helped some of your clients?
The Married Women's Property Act, I think it's a very, very important act that's there, which again, there's not much awareness about it, unfortunately. And the point number one that everybody needs to know is that just because you have MWPA doesn't increase your premium. So what is MWPA? What it basically says is that if a man buys a policy and the beneficiary of the policy is the wife or the children, and if the man dies leaving behind some outstanding loans, then the money from the policy is the right of the wife and cannot be attached for those loans, right? So I think it's a very, very powerful tool that's there. And the main thing that people need to understand is that you need to buy the policy under MWPA. You cannot add it on later on.
That's right.
And second thing is, it does not increase your premium.
Right.
So certainly I would say, even if your spouse is salaried employee, they might get into a business later on, right? So I would say that if a man is buying the policy and if the wife or children are the beneficiaries, then do think of buying it under MWPA, because it just adds that additional level of protection. And you never know if it will be required in the future.
Yeah, that's valuable insight actually. Never thought that way, that even if you're salaried, at some point in time you could go become an entrepreneur, and then this could be even more important. Yeah. So very important to look at the MWP, and it doesn't actually increase the premium but gives you that valuable power. And I think that's very much needed for women to have that power actually, right? Okay, let's move into something which is more, myths versus realities. Because, financial planning as an area is, while it's so important, there are so many misconceptions that keep arising. And so it's very important for all our listeners that we bust some of these myths, right? So the first myth that we have is that I don't need life insurance till I'm older. Okay, life insurance is something that only the oldies do, right? And I don't need it. So what do you say about that?
Always be prepared for the worst,
right,
and hope for the best to happen.
Yeah. No, I think that's very valuable.
And just to talk about it a little bit more, we have seen so many situations. So recently we had this case of this corporate employee who unfortunately passed away at the age of 27 in an accident.
Oops. That's
And
really-
his parents are dependent on him. His spouse was also dependent on him. And other than the group life cover,
Right.
he had no other term cover that was available. Right? So I think life has become just too uncertain for us to take this sort of a stance.
No, I think we always give that advice. You're right that the moment you have dependence, and particularly if you have double dependency with parents as well as with the spouse, then your life cover needs to be at a pretty reasonable level. As we were talking about that, under insurance is a huge issue, and you never know what life will bring going forward. So it's very important to be prepared. Okay, let's look at another myth. Financial planning can start later. Let's enjoy life first, right? This is very common. I've heard it many times. So how do we address this?
All good things take time to happen,
Right.
right? And that's true for your wealth as well. So the earlier you start, you have time on your side. So it's better if you start early and not keep it till later on.
Right. I think the power of compound interest, somebody said it's the eighth wonder of the world. Okay, let's look at another myth. Financial planning is only for the wealthy, right? Is that true?
Absolutely not.
Right.
Everybody needs a financial plan, right? I would actually put it akin to, anything that you want to achieve in life. So, for example, if you're running a marathon, right, you can't just get up one day and go run a marathon, right? You need to have a plan around it.
Right.
You need to train for it. And, there's a proper structured plan that people need to undergo before they actually run a marathon, right? It's the same thing with your money as well. Unless you have a plan, it's not going to work out.
Yeah. So always start early, right? Whether it's insurance, whether it's financial planning, have to start early. Yeah. Okay. A lot of people say that I don't really need to plan for retirement. I have a pension, somewhere. So that's also something which I'm sure you would have heard. So how do you address that?
Lifestyle, lifestyle, lifestyle.
Okay.
You want to live a good retired life, you need to plan for it better. You can't be just dependent on your pension.
Right, right. No, I agree that there is a lot more people underestimate their expenses,
Yes.
which they would be incurring post not having an income, and how each one of those expenses will
Yeah, and
come.
today
Yeah.
I see, like, even when you're traveling at the airports and all, you see a lot of retired people traveling,
That's right.
right? From all economic backgrounds. You see, like, travel is like such a big aspiration for people, and I just feel that if you there's no harm in having that aspiration, but of course that cannot happen if you're just getting a pension.
Right, right. In summary, if travel is one of your aspirations, definitely need to do better retirement planning, right?
Yeah.
Okay. So one of the myths I think we have is that you can actually use QR codes, and that's something which you will be using, and that's not something which is going to kind of actually deplete your finances, right? So how would you address that?
Oh my God, it's, I think, depleting our finances in a very big way. What's happening is, because it's become so easy to just use this QR code, you're just going on using it without really understanding, how much you're spending. And why only QR code? Even the quick commerce, right?
Okay.
I mean, I have known of cases where people are having like these 10-minute deliveries which are coming 10 times a day, 15 times a day.
Wow.
Have people actually looked at the sort of costs that they're paying for it? It might be 50, 100 rupees. You might think it's a small thing, but when you see it as a percentage, it's not small. The same thing is for food delivery. I see people cribbing so much about fund manager costs in investments. And, I find it really funny that we pay so much as convenience fees or for our own convenience by ordering online, that we're not realizing the sort of money that we're actually spending there. So the other aspect that I also believe is that the QR code, while it's very convenient, it's actually building, it's not building good financial habits even for our kids. Because what happens is that when the child goes, they're also just, they might be on a FamPay or whatever, and what happens is that they have no idea about what they're spending, and they're not counting money. So,
Right.
we're actually losing some of these very important aspects of counting money to be aware how much you've spent,
Yeah,
right?
no, I think
And
that's valuable insight. I thought that was a myth, but what you're pointing out is that it
it's
is
a
a
reality.
reality. And yeah, we are overspending, or at least losing conscious count of spending, simply because of the convenience that's happening, and it's not good for financial health, as you said. So, Mrin, really valuable insight on that one. Okay, Mrin, now we are going to come to a quick fire round. So this is going to be, really rapid fire one. So I'm going to ask you, a single straightforward question, and we're going to look for a rapid fire answer, right?
Yeah,
Okay. Best budgeting tip.
save at least 40% of your take home.
Okay. What's the biggest mindset shift couples need to make to succeed financially together? Mindset shift.
I would say planning for the long term,
Okay.
right? Because right now, everybody is looking at the short term and instant gratification. But I think we need to get back to thinking about the long term.
Okay. Rapid fire now. What's one money habit you wish every couple would start today?
Save, save, save.
Okay. How often should they review their financial plan?
Once a year.
Once a year is good?
Yeah,
Okay. Who is your dependable partner in your financial journey?
my husband.
Okay. Best budgeting tip.
Reduce expenditure on e-com platforms, whether it's food delivery, 10-minute delivery, or just shopping online.
Wow, that's important. Vrin, thank you for such valuable insights and some lovely lessons I think we've had in this entire session that we've had, and it's been extremely valuable for me, and I'm sure it will be equally valuable for all our listeners. We have a little bit of a convention which we do for all of our Depend on Insurance, Depend on Us podcasts, which is that we get you to sign our planter, and that then goes on our wall of fame. So actually, let me share with you a planter, and we would like you to sign it, and
Thank you.
as a memento of our session. And I'll
Thank
do
you.
the same for another one here, right?
Canara HSBC Life Insurance. Promises का partner.